Welcome to everyone who's joining. To tell you again, we're going to start on the dot of 5, so we still have 5 minutes. Since you're here already, what we can do, like we did last week, please put into the chat box what you do, where you're joining us from. So let's use the chat box while we're waiting. Let's use that for introductions. It will be very nice to know what you do so that we know the profile of the people joining, and we can also make the discussion relevant to your situation or to your business. So let's use the chat box. Okay, so thank you guys. Feel free to keep introducing yourself back in there, and we can use that to tell the message and making sure that we can bring examples from your field, which makes the content a lot more relevant to you. So hello again, and you are welcome. I really hope that, and I'm sure that you are keeping well and keeping safe during all of these times. I think that it's important what you do with everything that we learn in the course of TechBiz, in the course of even this whole period. And there's a lot of learning, right? And for me, I always remind you, remind my friends, remind myself as well that we need to start putting all our learnings into action. And for sure, we know action conquers fear. That's where we are. Make it happen, put those learnings into action. Another session we're going to have today, please make sure you're noting down those action points. It's good to note down learnings, but what's more important is what are you going to do about it? So please note that down. To introduce myself again, you see me every single week. This is our 9th week of TechBiz, and it's really exciting to see testimonials of people who this whole sessions are making a positive impact on their business, and they're able to use it to transform their business. And I'm sure you're going to be one of those as well. My name is Doja Ikeruchi. Everybody calls me Doja, so feel free to call me the same. I'm a strategist. I'm experienced in managing and growing businesses. I've done this for many years, and I've done this in a number of countries. So this platform is brought to us by Eco Innovation Center. The whole idea is to share relevant and practical knowledge that help you as an individual grow and also help your business thrive. So hashtag TechBiz, hashtag Eco-Innovation. When you hear those snippets, feel free to post on any of your social media pages. Quick housekeeping, you've seen your mute. We do this every single week. Feel free to type in your questions in the chat box. Feel free to introduce yourself in the chat box. That's always very nice. We want to recognize you. And then anytime your questions occur to you, please post it in the chat box as well. We will keep referring to it as our speaker first speaks on. He's going to speak for about 30 to 40 minutes. He's an experienced storyteller, so he's going to tell us a lot of stories. And then we'll go into the chat box to read your questions. Now, of course, if you want to ask your question verbally, just raise your hand on Zoom and then we will unmute you. I think that works. That's okay for everyone. I believe so. So Winston, you are welcome. And thank you for taking this on. I'm really excited about what you're going to share. And I tell you why market segmentation or defining your market becomes critical. In the previous sessions that we've had, people have asked one key question. Oh, my business is different. It's unique, right? It's relevant for everybody, but how do I speak with everybody? You're going to share with us, Winston, today that everybody is really nobody. And you need to segment your market. You need to target the right people. And then that's how you have the exchange of dollar cents, naira and kobo, rands and cents. That's when you really have the exchange of money. To introduce Winston, he's an investor. He's a founder, he's a strategist, he's an advisory board member, he's a speaker. If you go to his LinkedIn profile, you'll see he's been speaking a lot on CNBC, which is an international platform. And he has a passion for driving successful business in East Africa. And I believe, of course, that takes us even further into the rest of Africa. He's got over 20 years of experience in private equity, investment banking, and asset management. And Winston, you did tell me that investors really always want to know, who are you targeting? What is the viability of that market? And that's going to determine whether they put their money or not. So this is such a critical lesson for us, or a critical session that we're going to learn what you as an investment banker, what you as a private equity practitioner looks for before you invest in a business. And again, to keep introducing Winston, he spent his career guiding investors, guiding founders, guiding regulators as well across sub-Saharan Africa, in Nigeria, and also in the United States. And he is a founder himself. He is the co-founder of Trans-Sahara Investment Corporation. It's a firm focused on early stage startups and SME ventures, primarily in West Africa. And you have seen already that we have a lot of entrepreneurs on the call, especially even people who are just starting. So it's great that this is just perfect timing for our people on the call. Winston, you are welcome.
Georgia, thank you very much. I guess I hope I live up to the billing that has been set up. To everyone that's on the call today, good evening, welcome. Thank you very much for taking the time. I hope in the next 30 to 40 minutes to share the little bit I've seen in my journey through the business world, especially working with startups, entrepreneurs, and just people who have started to make that decision whether to turn a passion into a business, or if an idea is actually a business, or if it's simply a simple transaction for it to be one and done. So I will go ahead and I guess I can share my screen now.
Yes, please do so. And by the way, to everyone, you will get the presentations after. You will also get the recording of the webinar after as well. So don't you worry, that will be provided to you.
All right, thank you. So the title of my presentation today is Market Definition, Funding Operations and Marketing Strategy. And the reason why I put it that way is simple. Until you define your market and everything about your market, that definition should drive every other thing you do. It should drive how you fund your business. It should drive how you set up your operations. It should drive your marketing strategy. And as we go through, I will, hopefully that will become clear. All right, there we go. So the difference, and what I'll do is I'll kind of skim over the slides so that this can be a bit more conversational rather than reading a slide out to you. But here's the main thing. The difference between a good idea and a business opportunity is if you can find somebody that's willing to pay you consistently for that idea. So there are a lot of good ideas that are great for one person. They're excellent for two people. They might work for four people, but four people do not a market make. So I'm somebody that I'm very passionate about basketball. I'm passionate about cigars, and I'm passionate about whiskey. And I'm looking for a product that brings all those three things together. But if I find a good idea that brought those three things together, does that make a business that I can take and go out? Well, until I can go out and find a real constituency out there that also says this is something that we want, we see value in it, and we're willing to part with money and time to invest in that product, then what you just have is a nifty good idea that makes your personal life easy and not particularly a business. So at the end of the day, defining that market becomes the most foundational activity in creating a business. You take your idea, once you define what the market is, then you can figure out how can you fund it, because your market will tell you what the funding should be for it to work. How should I market? Because your market will tell you how they want to receive messages, how they want to receive messaging, how they want to receive service, and how they expect to be treated. And then your operational strategy will also be defined by that market, which would be how do they want these goods and services to be delivered to them. So when we start to just quantifying or defining a market, there are three main things you start with. First, the first one is total available market. That is just basically saying everybody on this planet that could use your goods or service can find value for it and can pay for it. Once you find that number depends on what it is. If it's bottled water, it's billions and billions of people. If it's diamond encrusted wristwatches, you're down to maybe a couple of million people. And thankfully, if you are selling radiation equipment for treating cancer, hopefully it's only 2 people at any point in time. But that just gives you what is the size of the market that is out there. Then your serviceable available market, these are the people that are willing to pay for that particular type of that product that you're offering. In some cases, when you say serviceable, you're talking about geography. In some cases, when you say serviceable, you're talking about style. So to give you an idea, when we talk about geography, you might be, if you are selling a physical good that has to be moved from place to place, and there's restrictions in how far you can move it, then that restriction will tell you where your serviceable available market is. On the flip side, if you are selling cars, if you're selling Rolls Royces, your serviceable addressable market would be all the people within the car buying space that can afford cars that you can get to. Meanwhile, if you are selling Volkswagens, if you are selling Volkswagen Beetles of bygone days, it will be another group of people. Then the final is the serviceable obtainable market, or a lot of people call it target market. And this is the people that you are going after. This is the people that you have a high confidence that your business, the way it's defined, the strategy you are employing, and the way you are marketing, that you can get to these people and you can get the most optimum results from those people. When we look at market definition, the first thing we need to do is, on figuring out your funding structure, is to ask ourselves, how is the entire market itself structured? In general, there are three main market types: monopoly, oligopoly, and then quote-unquote perfect competition, which almost does not exist. But in between, there are kind of mixes of all the three. But really, when you look at it, you will say that there are three major market characteristics. In a monopoly, that market usually has one player that has pretty much 99% of the market. They are usually very big, and they have complete control of every part of the market. They decide who comes into the market and who goes out. They set the prices so they can reduce prices and chase new entrants out of the market. And in a lot of times for the monopolies, what drives their power is access to a rare natural resource like oil and gas, rare earth metals, or ownership of a patent, so that particular method of doing business belongs only to them. In an oligopoly, the classic oligopoly that most of us have known all through our lives is Coke and Pepsi. This is a place where there are two or three very few very large players that have decided to basically share the market. So everybody that comes into the market gets crushed, because these two people are working in concert, sometimes overtly, like a cartel, which would be OPEC. Other times, they just kind of work in concert, which is what you see with like Coke and Pepsi.
But with and the last one, just a second, with the example that you have given, I think Biggie is bringing a real challenge in that space. Huh?
Who is bringing who?
Biggie is changing the model basis that example. Biggie Cola, you know Biggie Cola, don't you?
Yeah, Biggie Cola, but exactly. But here's the thing:
oligopoly of Coca-Cola and Pepsi.
On a local level, but not on a global basis.
Correct, on a local level, indeed.
And in fact, you will see that when we move forward.
Okay.
And the last is just perfect competition, which is a case where 1,001 people are selling it. You buy from whomever gives you the best price and best value. Most of the people in this space usually sell commodity products. Like now, one of the commodities that we all use that people compete for, but we don't realize it, is payment systems. So people that own payment switches, it's a commodity. If I use it to switch, I use e-transact. It doesn't matter to me. The only thing that matters to me is whoever is doing it, does my payment go through? And does my payment go through most of the time? And do I receive whatever money people have sent most of the time? If you're the merchant, it's like who is charging me the most and who gives me the most access to collect more forms of payment. So when you look at, let me just go back. When you look at the way you fund these businesses, they are slightly different. In a monopoly, the amount of equity you need to go into a monopoly is extremely large. For one reason, there is one person in that business that owns the entire market. They can drop the prices and basically run you out of the market. So why do you need so much equity? You need that much equity just to survive the process. You need to be able to stay in business long enough to establish yourself and give people a reason to come over to come and use your product. And that is not an easy task. For most monopolies, they are not broken up until government intervenes. The perfect example of that would be in the US telecoms industry. For the longest, until the early 90s, there was only one person, Bell, AT&T Bell. Then people went to court and they got broken up into what they call the baby bells, which was Atlantic Bell, Southwest Bell, and I forgot the name of the other ones. And today now, if you look at the US, we have Verizon, AT&T, T-Mobile, Sprint. It's just completely fragmented. So for monopolies, usually what breaks it is you either have government intervention or major technology shifts that renders that monopoly power obsolete. But either which way, if you're going into that business, you have to have a lot of capital. Another person that you might want to look at in the monopoly business is, if you think of all the car makers in the world as a monopoly, imagine Elon Musk when he went into that business. If he was not able to continue raising a lot of capital continuously, he wouldn't have made it. He wouldn't have made it. He would have got run out of business a long time ago. But now he is the most valuable, Tesla is the most valuable car company on the planet. Oligopoly, like we've mentioned, is Coke and Pepsi. Again, if you're going into that business, you need a lot of capital. Because Coke and Pepsi have the money, they have the markets, they have the marketing, and they control both demand and they control both demand and supply, because usually they control the distributors. They can tell the distributors, if you carry that guy's product, I won't give you access to my product, which is what people already know. So if you're going to go into that business, again, you need a lot of capital. You need a lot of equity capital. And for the oligopolies and the monopolies, you can't use any debt, because debt requires you to make payments at a certain time. And when those payments are not made, your debt owners can take over the company and your company becomes bankrupt. So if you're going against a monopoly or an oligopoly, if you have debt on your balance sheet, all the monopoly or the oligopoly players have to do is make you miss your debt payments, and that's it. You're out of business. And you're out of business, they can buy you up and you're done. So using debt to fund the business that's going into any of these spaces is generally not advised, and I'll be shocked if you'll find people to even give you debt. For a perfect competition, you need moderate to high, it depends, but in general, you need moderate to high amount of equity to go in. In this case, you can put a little bit of venture debt in your capital structure, because you are fighting with other manufacturers who basically, everybody is pricing. It's all about pricing and value. And if you do it correctly, you can add a little bit of debt and run through that business without any of your competitors being able to price you out of the market, so to speak. The other thing that, the other place that, the other thing that we have to take a look at when we talk about markets is that when market definition matters is your operational strategy. So the question now is, based on the structure of your market, once you've defined your market, based on that structure, it will basically inform how you set up the following. Things like your product management and development, your supply chain, what kind of people, what level of quality, what kind of processes do you use, what kind of inventory system do you use? Are you using just-in-time inventory, or do you have to hold large amounts of inventory in stock because your customers need it? How do you schedule your production? Is your production year-round, or are you batch producing and putting out? And where do you locate, and how is your factory set up? And to give you an idea of each of these ones, look at project management and development. A lot of times I hear things like, people in Nigeria walk up to me and they say, oh, we're opening this technology business and we're going to manufacture, solar panels. Well, if you're going to manufacture solar panels, the first thing you have to ask yourself is, the first thing you have to realize is it's not enough just to build solar panels today. You have to have the resources, and this is both monetary and personnel, to do the R&D necessary to continue to iterate and improve that product on a regular basis. If not, your product will become obsolete vis-a-vis the other products that are out in the market. Same thing for computers. There were a number of people in Nigeria that were assembling computers. Those people have not stayed competitive, because if you look at the average life of a computer, of each computer brand or each computer model, it's somewhere in the neighborhood of 9 to 13 months. So these people are actively updating the technology. Same thing with mobile phones and what have you. So the market you're going into, you have to ask yourself, is this a market where I can compete on all these levels? What kind of market is it? Can I compete on all these levels? And if you look at all those things and you can't match up with it, then that might not be a market to go into. The other one that people find odd sometimes is when we use the word quality. So there's a difference between quality and value. Something can be very high quality without being very high value. And something can be generally moderate quality and be very high value. So a quick example is, and I keep using cars because that's one of the things I slightly know about. A Rolls Royce is very, very high quality. It's very, very high monetary value, but as a car, do you value it more than any other car? Well, that's a question that question is open for debate. But on the flip side, you can also build a car like that has been very successful, like the Toyota. Pick your Toyota, the Toyota Corolla, that has been a very successful car. That is not the highest quality. It is not the highest monetary value as in price, but people value that product even more. And so if you look at it, if I'm building a car for everyday use, do I want to build it like a Rolls Royce and make all the wood, make all the inlaid wood grain with real wood lacquer and match leather? Or do I want to build it like a Toyota Corolla and just use and just let basically the buyer decide what he wants in the car? And at the end of the day, it's going to depend on which kind of market I'm going after. If I'm going after the pool car market, I don't know a lot of pool car people that want to buy Rolls Royces. They would value the Corolla more. If I'm going after the people like everyone that's on this call, if you people are the ones I'm going after, then I might be looking to sell Rolls Royces. But it is very important to understand your market, and that will really tell you how you think around the operational strategy that you want to run your business with. So if we continue to look at that, again, that operational strategy defines all these things, and as you go through the process of deciding, as you go through the process of building out your business plan, thinking through it, it is important that you take each of these boxes and you delve into it and ensure that there is a product and market fit. So if the product you want checks all the boxes on this, then you can take it to the next level. And you can go out to investors and appropriately tell them what you need, raise the right amounts of money, and attack the market that you decided to go to efficiently. Marketing strategy. So at the end of the day, most people, when they think of defining markets, this is what they think of, which is marketing strategy. And at the end of the day, marketing strategy only talks about one thing. It just talks about how do you go and get to your prospective customers. So before you can get to a marketing strategy, you have to know your market. So when we do that market definition, you don't define your markets around your marketing strategy. Rather, you define your markets, and based on that market definition, then you find what kind of strategy you're going to use to go after the customers you're going to find there. There are two broad categories of strategies you can use. There's the business to business or B2B, which is basically you're selling your goods and services to another business who ends up selling it to the end user, or who might actually sell it on to another business before it gets to the end user. I tend to call the B2B business brown box businesses because in B2B businesses, most of the people that use your product don't know use your product. They consume it either in a bundle anonymously with other products, or it's so far embedded in the process that your branding doesn't come up. And then there's a direct to consumer, which is a B2C business. Now that is a business where brand visibility is very high. So in that business, you must be able to go out, you are going out to the actual individual customer, putting the product in front of them and trying to get them to use it. So again, you have to figure out what product are you selling? What product did you create? What kind of market are you going to sell that product into? And that market will define what you do here. So to give you an example, the largest chemical companies in the world are unknown to most of us on this call, except people that are chemical engineers, because the chemicals they sell are used to offer goods and services that we procure from a third party. So the guy that's painting my house, I don't ask him who made the paint thinner he's using to strip the old paint from the wall before he puts new paint. I don't ask him that question. It's irrelevant to him. But just as the same way, I don't go to Dulux to ask them, who provided the pigments that went into your paint? I don't care. Dulux is a customer brand. I go to Dulux and I say, Dulux, give me blue, yellow, and green. Meanwhile, if you go in the back, Dulux is buying the blue pigment from someone in China, the green pigment from someone in India, and God knows where they're getting the other ones from. But those things, those ones you don't care for. And in those two businesses, the way you attack them is very different. The way you talk to your customers are very different. The way you engage in the day-to-day marketing, messaging, and everything are always going to be very different. And the last part I like to look at very carefully when we talk about markets is looking at scalability and viability. First one is scalability. And scalability basically just asks a simple question. How large can I grow this business? Is this a business that's going to grow, that I'm going to be able to serve only people that live in Lekki? Or is this a business that can serve people that live in Lagos? Or is this a business that can serve people that live in West Africa? Or is this a business that can serve people that live across the planet? The other part is viability, which is simply, if we say we want to go into this business and we look at the size of our target market, and so this is what you tend to do here. I go to my target market, and let's say my target market is 1 million people. And those 1 million people, the lifetime value of each of those 1 million people is $1. And this is just to make it easy. So if I look at that, that means the entire revenue I expect from my target market is $1 million. So for $1 million, how much will it cost me to build this business to achieve this $1 million? If it's going to cost you $800,000 to build a business and the revenue potential is $1 million, the question is it viable when you adjust for risk, adjust for your cost of capital? Is that business viable? But on the flip side, what if it only cost you $50 to get $1 million worth of revenue? Is that a viable business? So that is a question that everybody must take the time to ask. And the key metric here is that lifetime value of your potential customer. It is very important that in every market, in any business you go to, you can define the unit economics of that business, which is how much does it cost me to find the customer? How much does it cost me to deliver the service? And how much will this customer pay me back over the period of time that I'm going to serve him? If we look at those numbers and that number is not significantly positive, and by significantly positive, I mean your return is significantly greater than your output is significantly greater than your input, then you have to ask yourself how viable that business is. And these are the questions that an investor will ask you at the very end after they go through everything. They will ask you, first, is your business scalable? And after going through the scalability, then they'll ask you the question, what are your unit economics? Is your unit economics, does your unit economics show viability of the business? And here's one thing I don't want us to take wrongly. It is expected that if you start a business, you're going to lose money for the first couple of years, if not for the first 3 years. It is absolutely expected. However, we also expect that you should make more money for each unit of whatever it is you're selling. Because, so here's the example. If you built a business with ₦1 million, and in the first year, you did ₦1 million in sales, your total cost of sales was 990,000 naira. So your total profit from the sales was 10,000 naira, but it cost you $1 million to build that business. Well, at the end of the year, by the time you work it out, you would have run a loss. However, if you look into your business you made 10,000 naira. It's not a lot, but you made 10,000 naira. Now, if you did that, then we go back to the first question. If your unit economics are good, which means that my cost all in of this product, if I subtract it from my revenue, it's positive. Then the next question is, if your business is scalable, what I need to know now is how much operating leverage do you have, which is basically how much more do you need to sell using the same platform you have before you get to a profit. And that is what investors want to see. And then they are more than happy to start making those investments that are necessary to help you grow your business. And this is usually the place where things get, once you've gone through the process with most investors, this is usually where it breaks down. Unless the investors understand your unit economics, which will tell them how viable the product or service is, and then they back it into the scalability to see what is the long-term what is the long-term return they can expect in the business. If they don't see it, that's where they usually run away, because 99 times out of 100, most people that come out looking for capital usually have done most of the work of what we've discussed coming up to this point.
Winston, can I ask you a question there about,
Please.
A different industry, right? So remember we asked individuals to introduce themselves, and we have quite a few people in agribusiness, agro-business, and even farming. If you were to use an example of farming and its produce in the previous slide, could you break this down to us so that we can connect it to our day-to-day business?
So if I was going to use farming, so there's a small difference in farming, and here's the small difference. At the end of the day, if you're going into farming, so if you remove the cost of the entrepreneur, what you're asking yourself is, I want to invest in a farming venture. I have to get land. Usually for a smallholder farmer, they usually own the land. But it would be great if you actually leasing the land, because if you're leasing the land, then you can say, okay, what is the cost of the land? What are the cost of the inputs? And how much do I expect to sell these products for? And when you look at that, based on that, that should tell you if that particular farming venture makes sense. So what you will find is that for different crops would be profitable in different places. So you can grow rice anywhere, but growing rice in the desert is probably going to cost you a whole lot more than you can sell the rice for. But on the flip side, trying to grow cactus, which is a general desert crop, in the middle of the swamp is going to be the exact opposite, because you're going to have to spend a lot of money, time, and resources terraforming the area that you're going to plant this stuff in before you're going to be able to produce a product that you will now go to market and compete with people that are producing it at a number that makes a lot more. They're producing it in more ideal settings. So when it comes to agriculture, the first thing to figure out is, what is the cost? What is the best thing to plant where I am? And how much can I get for planting that? And that's where you back yourself in. That's how you should decide what to plant. The whole idea of saying I'm going to plant this regardless of where I am, that is just not the way it should be done. That is not the economic way to make that decision.
Cool. Winston, please go ahead.
Yeah. No. I thought someone had another question.
Yes. Oh, there are quite a number of questions already in the chat, but I thought you wanted to take the closing right away. Yeah,
so let me do that, and I'll take the questions that were sent in ahead of time, then I'll do these. Are we good on time? Yes, we are. All right, so in closing, defining the market and the opportunity is the most important part of starting the business. I think hopefully it has become clear. Once we define the market, that tells us if we even have a business. And once we decide we have a business, then based on the market we're serving, we decide how we will fund it, how we will run it, and how we will market to the people that we're looking to sell that to. Now, there's one other thing that I think is very important. If you have an idea for a product and you go out and you don't find a market, it is usually not a winning strategy to think you will create the market. And I use the word usually. There are some cases where people have created a market where it did not exist. There are some cases, very few and far between, but there are some cases where they have. And most of those cases, initially when they came out with a product, people tossed it out and said it was wrong. And I think the most popular of those was the Walkman. Sony came up and they had their little product development, or come up with a product, we need a killer product that will put us on the market. And someone came up with a radio that you tie on your hip with headphones to walk around. And the people at Sony looked at that product and they threw it out. They said, no, that is garbage. Who wants to carry that stuff around? On the flip side, that product created a whole new market. It created and defined a whole new market. And if we look at even to what we have, the iPods of today, they all owe their existence to the Sony Walkman that was initially cast out as not being a viable product. So most of the time, but that's the one of the few successes. If we look for the failures in that space, there have been a ton of them. During the dot-com era, this is one that's generally easy to remember. During the dot-com era, everybody came out and they decided that we all want services. We all want to do everything online. And that if I put it online, people will buy it from me. And everybody went out and they built their grocery businesses online. So there was Webvan, Peapod, there were a bunch of them back then. But they made one small mistake. Their belief was that people wanted to order stuff online so they didn't have to go to the store, and that people would be happy to sit at home and wait in a 4-hour window for delivery. So basically what they thought, the market they created didn't exist. But today we fixed that, because today the market we've created today is click and pick, which is people want to buy it online and go and pick it up, or people want to buy it online and have it deliver it to their home at their convenience. But that whole idea of people want to buy
it. The concept of an idea that is ahead of its time, right? So while the idea may be translatable to a business opportunity, but it's not its time yet. Cool, that is possible.
That is possible. That is possible. But here's the key part. Nothing has changed between then and now. The only thing that changed is in the first iteration of online shopping for groceries. Online shopping for groceries, and I restricted this to groceries in particular because those are perishables and I can't leave it at your door. Back then, they would tell you what hours to wait. So now, what benefit are you getting? You buy the groceries online, you have to leave home, you have to leave work and run home to go and wait for them between a certain time for them to deliver it to you. That doesn't give you convenience. What they found out after all those businesses went bankrupt, and if you roll up to today, they found out that people are more happy to buy the product and drive to your store and you just put it in their car and they leave. That became more serviceable. So you look at people like people like Flipkart. No, not Flipkart. There's a new grocery store system out there, but those people also expect you to deliver when they are there. But that whole idea of I will wait for you for 2-3 hours for you to come, that market never existed. The only people that could do that were a small sliver of people, and which would basically stay at home moms who had to be at home. So it's always very important to make sure that whatever you think is your business is serving a need that exists. It is very, very difficult to create a need that absolutely does not exist. That is usually not a winning strategy. And usually, if you get it right, you'll hit it out of the park, you'll make a gazillion dollars, but you will find it very, very difficult to find people to go on that journey with you because there is no blueprint for what you're trying to do. So I always say, if you're running a business, you should have an existing market that you're going to serve, and you're just going to serve them better than the next person. That is the easiest kind of business to build. If you find demand that is out there that nobody is serving, go in and serve it. That you can get people to come along for you. To get people to come and let's go on a mission to El Dorado, that's always difficult. I'll give you another one. We all love cell phones today, but does anybody remember Iridium? Iridium were the first group of people that were going to give us sat phones, and everybody was going to have a satellite phone, and we're all going to run around the world calling each other from everywhere. They've gone bankrupt like 4 times, and we're still here. It's not that nobody needed it, but at the price point where it was, there wasn't enough of a market to pay $10, $15, $20 for a call. There wasn't enough of a market for those outside of the military, and the military had their own infrastructure to do that, and that business never took off. In fact, Iridium now, although interestingly enough, Iridium now is profitable because they sold all they're selling their band, they're selling the frequencies that they are acquired to run their sat phones. They're selling it to people like what's his name, Elon Musk's satellite company and the rest of them. They're selling it to them to use to deliver internet, but it never worked out for phones just because the market just was not there.
You know, now we're talking about defining market and existing definable market, and I just want to connect it to a question that has just come in. We're still going to take all the previous ones, so don't worry, guys. I'm going to take every single question in this chat room. But Donald is asking how to calculate the size of the actual size of the market. I assume, Donald, that they're saying calculating your target market in a country like Nigeria where you don't have proper data.
So at the end of the day, you know, data is one of those things. Data is the curse. Data is the curse and the blessing. And I'll tell you this much: in Nigeria, we have a ton of data, but people are always, if you're looking for a box that has exactly the data that you want, you're not looking for the right things. Because of the way we collect data in Nigeria, and think about all the information that you put out there every day. Every kind of data you want exists in Nigeria. You might not be able to find it directly, but you can find something that is close enough to which you can use as a proxy for that data. So depending on what you're trying to find, like let's assume you're trying to run a business that is based on people signing up for a music app. If I was trying to find people signing up for a music app, I might not be able to find the number of people in Nigeria that have music on their phones, or people that are downloading music online. I might not be able to find that, but I can find all the people in a certain age range that have internet connections on their phones. So that becomes my target market. It's not exact, it's not pinpoint, but in that group of people, I will have captured my entire target market. So what you need to do is, if you can't find that list that says these are the people I want, you look for the closest data. It's like this is going into the weeds. It's like if I can't find the exact thing I'm looking for, I look for what might be the output of what I'm looking for. So if I'm trying to find where do a lot of people live, and I can't see and I can't touch the place, if I measure the amount of carbon dioxide in the air and pollutants in the air, I can tell you where the most people live, because that's where people with generators are, that's where the cars are, that's where the motorcycles are. So I can measure air quality and tell you which place is more populated than the other. And that is just a very esoteric way of looking at it. But at the end of the day, there is always data out there. You just have to look for other ways to find data points that are really close to what you need and use that instead. But you cannot work without data.
No, absolutely correct, Winston. I think also that there's a lot that we can tell from Google, even from social media usage across the country. They do say, I don't know what the accurate number is, but about 60% of the country is connected, and somehow we have digital footprints. And in that digital footprint, the biggest collector of that data still remains Google. And from Google Analytics, you can actually gather quite a bit. So depending on what you're looking for, Donald, feel free to post again on exactly what you're looking for. Maybe we can already give you some touch points on where you can find it. I'll allow you go through this, but we need to start to get into the questions, Winston.
Sure. Well, everyone is going to get this. This is just members of our team. We're 8 of us strong. Most of us are in the US. I think there are 3 of us here in Nigeria. We continue to invest in early stage businesses. We have a tech bent, but we're not a tech investment company. I am a non-technology person. Myself and Scott, we are both Luddites. I'm proud of it. Everybody else, for some reason, is a physicist. I don't know how that happened.
Winston, we were all technology-driven people. Why are we on this on a Zoom call? Why are we not gathered in one room? Somehow, somewhere, we are all using technology. Maybe not in the most sophisticated way.
We're using technology out of necessity. This is out of necessity. If you like me, I said, let's go and find a hall where we can all see each other. Now, here are some questions that were sent in earlier, and I just went through it and tried to answer them as quickly as possible. I will kind of move around because some of them I think have a lot of good information to share. Some of them are just, we can skip the first one. How do I stage my business for higher sales? At the end of the day, if you want to sell more, give more. That is the easiest way to equate your business. If you want to sell more of anything, give people more value every time they buy it. That's the number one way to sell more. There's no other magic to it. There's no packaging. There's none of that nonsense. Give people value, they'll come to you. They'll come back to you every day. How can startups effectively access international funds? I think the number one thing for any startup, especially in this part of the world, is you have to make transparency part of your business. When you invite people to come and take a look at your business, they must be able to look through your business very quickly and see what it is that you're doing or not doing. To tell people to invest in a system where, we have a black box strategy that you can't clearly explain, people won't do it. Because here's the fact of life. People don't like to hear this, but we're a high-risk environment. And we're a high-risk environment. And when I talk about risk, I'm not talking about fraud. I'm talking about we're a high-risk environment because we have a currency that's soft, and as you can see by our devaluation. So someone that's bringing money into Nigeria is already taking risk the day the money hits Nigeria. Then we have all these other risks, infrastructure, all the other things you want to pile on. So by the time you look at all that, the kind of return you need just to get past what I just call environmental risk, that's just risk of being in Nigeria. Then you now add to the fact that the person is asking questions and you can't give them books, you can't give them anything. It's better for the person to just keep their dollars in their pocket. It's just as simple as that. Nobody ever wants to go to that. It's easier to say no than to explain why you lost money in any business. It's easier to say no. So what are ways of seeking out the right partnerships for your startup? I'll say anybody who's in a startup that's looking for a partner, find somebody that needs what you bring. So if you are a guy that your business aggregates young people, well, ask yourself, who would like access to these kinds of young people? And you can partner with that person. What that allows you to do is deliver more value to the customers you've already onboarded, and you're also delivering value to this person that you've made your partner. And the chances are that between the both of you, if nothing else, you just reduce cost, and there should be some exchange of knowledge that should help you guys grow. How do I defend and locate my target market? I think we've gone through that all day today. Need to find out who's going to use or buy my product, who can afford it, and where are these people located, or which part of the economy. And by economy, I mean if I look at the pyramid, they're at the top of the pyramid or the bottom of the pyramid, they're in the middle. I need to find out where those people are, and then that's how you can really take the time to say, this is my target market, and build your entire strategies around that. How do I clearly segment my market? Again, if you want to segment your market, you have to find all the unique characteristics of people within your target market. And if you can sub-define people in those target markets by unique characteristics, that is the segmenting of that market. If all of them happen to be uniform, which I would venture to say that almost never happens, then you only have one market group. What type of customer should I attend to first when dealing with my customers? My belief is every customer is your best customer. Every customer that gets good service is not likely to tell somebody about you. But every customer that gets bad service is almost guaranteed to tell everybody about you. So the question is, do you want to take the risk? You might only be having $1 in sales run made to that person, but the person can take hundreds, if not millions of dollars from your reputation just by how you've treated them. How do you define the revenue opportunity when conducting a market size definition? And I went to this earlier. It's just a basic calculation. What is the lifetime value of each customer multiplied by the population size of that target market? And once you put that together, that tells you what the entire revenue opportunity is. How do I employ the right people, and what steps do I need to take in creating a better environment for employees? For me, I think relationships is the number one thing. So you hire for, I hear this a lot, hire for attitude, and you can teach aptitude. The number one thing is just, I keep it simple. Hire people you like to spend 18 hours a day with, or people you think you can spend 18 hours a day with. They don't have to be your best friends, but you have to be able to sit with that person for 18 hours a day. And you have to hire people, if you're starting a business, who are passionate about the work. If it's people that are just passionate about the money, they're not going to be there long. Because before the money, there's going to be a lot of work. And if people that are in an early stage business are not passionate about the work, that thing is not going anywhere. And then the last part is, and this is something I don't see a lot of, but you need to give equity to your early employees, because your early employees are those people that are passionate about the work. And by giving them equity, you make them an inherent part of the business. So they start to make decisions like you, who is the owner of the business, because they have skin in the game. Their skin in the game is not just the salary they're paid. Their skin in the game is the upside when they build a larger, more profitable institution. Defining market during a pandemic, same thing. You just adjust for behaviors for a pandemic. So if you are going to go into the food business now, you might want to ask yourself how many people are actually going to be eating it vis-a-vis taking their food to go. You might have to make some changes there, but in
Pause,
the end, it's still
Winston.
the same way.
Would you just pause?
Pardon me?
Now I'm going to go straight into
No,
the
no.
group chat because the questions are really
Sure.
piling. So I'm going to go in there ever so
Please.
quickly. Oluwashogo, just keep your hand up. Where I'm going to get to you as well. So the first question that came way back since 5:30 was about how do you mitigate against loss, especially when you're getting into a highly competitive venture. So in this case, it could be an oligopoly, it could be a competitive market, and I'm getting into there. How do I mitigate against loss there?
That is a tough thing to try to fix on the front end. Loss is going to happen. You're going to lose money on the front end. Now, so the question more is, how do I survive through it? You're going to lose money. If you go into starting the business thinking about mitigating loss, you've already lost. You might as well stop. Because from day one, you're losing money. You're going to lose money till the day you sell the first product. And the day you sell the first product, you're still going to be losing money up to the point where you break even. So the question your strategy should not be around loss. Your strategy should be more around, I am going to lose money for this amount of time. How do I make sure that I am funded and I survive that amount of time? And being able to accurately figure out how long that will take you, that is the most important thing you can do entering any market. So don't focus on mitigating loss. Focus on making sure you have enough capital to survive until you make it. You're going to have to survive.
Yeah, definitely. And you're also going to need cash flow, right? So which means that when you actually do start to offer that service or product, you need somehow to be able to sell, right? Maybe I could also ask a question.
Idea.
Yeah.
Uh-huh.
No, because I wanted to ask, right? In that same consideration, if it's a highly competitive venture, right? You could now look for the areas of weaknesses of those giants in that segment and take advantage of those weaknesses. And it could be geography, because for instance, I mean, Lagos is not Nigeria, right? And while those big giants can be strong maybe in the Southwest or maybe in Lagos, you could find other parts of the geography that they are weak in and then try to take advantage in those spaces. You could also find a certain niche that those giants are not meeting right now from a need state point of view. I mean, I don't know what you think about that possibility.
No, but you see what you just done? You have taken the market, you have shifted and decided where your target market is. You haven't talked about mitigating losses. You've said, I want to find where these people are weak. I want to find where I can go in and take them from the flank. And that is defining your market. Once you define that market, then you need to fund yourself to be able to withstand them when they come after you.
Correct.
But you can't be setting a plan on how do I mitigate loss. That's not the plan. That is absolutely.
That's not at the front end.
That's not at the front end. Amazon lost money for 19 years. 19 straight years. Tesla just made money the last couple of months. They just made money the last 2 or 3 quarters. And even that money they made wasn't from selling cars. They made it from selling the carbon credits that they got for making electric cars in Europe. That's what they're making money out of. So if you start at the beginning asking yourself, I don't want to lose money, then you're not in business. Look at our friends Uber. Uber loses $2 billion a quarter, and they've been around for 10 years. So again, you can't start with loss. Build your business, fund yourself, make sure you raise enough capital to get through.
Excellent. Now, how about scalability and viability of food packaging and processing business? Because you had given us the example in some other segments, and the question here is about food packaging and processing. I reckon that will be packaged foods, right?
Yes. So for packaged foods, interestingly enough, that is one of the easier, I don't want to say it's easy, but that's one of the easier spots to go into, because at the end of the day, once the product you're selling, for packaged goods, it's easy to price your product. The inputs that go into a packaged food are fairly standard. It's a lot easier to price that. Now, scalability is who are the people that eat whatever it is you're doing. If you're selling something that's extremely unique, again, you have to figure out how many people are out there and figure out if there are enough people to support the infrastructure you have to put together to deliver that product. Now, the good thing is, now that we have organized retail out there, if you have enough people that want this product, organized retail will help you get the product to them, so you don't have to build everything in between. So that has significantly reduced the barriers to getting into this business. so that you can actually get into this business without having to invest as much money in your supply chain as you normally would to distribute your product. So if anybody is going to the food industry, packaged foods, I would advise that you put a lot of money in your packaging and branding. Make sure your product is of a certain quality so that those retailers are willing to stock it, and you have to also show them that there are customers that are looking for that product. It should be good enough for them to put on their shelves, and there should be customers that want to buy, and they would help you get your product as close to your customers as possible.
In my experience with food, because I worked in food for 15 years, right? And it starts with the product itself, with the taste, as basic, as straightforward as that, with the taste of the product. So yes, exactly everything that you mentioned as well in the value chain, but my goodness, you have to be pedantic about improving the taste and the preference of that taste by your target market, whoever they are. In some situations, your target market, the one who is going to buy is different from the one who's going to consume. So a perfect example is always baby food. The mother is going to buy, the child is going to eat. If the mother buys for whatever reason, whether it's available, the packaging is beautiful, you've made some really fantastic claims, if she takes it home and the child spits it out, she will never buy it again. So the taste of the food, extremely fundamental in the entire business value chain of food packaging. I'm going to go to Lucy. Lucy from SA, she's asking, well, this is not necessarily marketing related, but what are the disadvantages of starting a coaching business from your savings, as she would not like to take a loan now that she's starting the business?
Disadvantage, a coaching business is like a consulting business, is a one-on-one business. Those businesses is actually not a good idea to take a loan for a business like that. Because again, remember, in a coaching business, you're going to go out there to win customers one person at a time. It is a high touch, high relationship business, because a personal coach, and the word there is personal, is someone that you're willing to share real intimate information with. So it's not the kind of thing people just do on a lark. Doing it out of your savings makes the most sense. If I remember correctly, you said you were doing this part-time while you were working full-time. I think that makes a ton of sense. Take the time to build up a book of clients before you now go full scale, because that business is not a commodity business, and it's not the kind of thing that I have not seen a lot of people that have gone from 0 to 1,000 in that business. It's usually a slow process of building it up.
Relationship. That is the key for consulting. You are absolutely correct. Okay, so I'm going to still go. Hotels and events booking consultants. That's Collins. How do I calculate my market potential and size?
Hotel and events booking. Well, your market potential, this is me just taking it off the top of my head, would be to add up all the hotels and all the booking. So I would add up all the event centers and all the hotels that are out there that are not on the major platforms. Those would be my target market to start with. So I don't think anybody's going to come to your app to book a cool hotel, but I would expect that people will come on your app to book a small boutique hotel that's somewhere in Lekki or somewhere where people don't know much about.
Sorry, looks like I'm crashing in on meeting the PTR copy. Winston wanted to meet 10 o'clock Pacific time.
Okay. There were some hands raised, and somehow those hands have gone down. So I'll just take another question from the chat box. Guys, please feel free to raise your hand. Nina Briggs, I saw you raised your hand initially. Okay, Oluwashogo, let me unmute you quickly so you can ask your question verbally. So accept my request to unmute, please.
Helpful insight for you as well as the rest of the data science team. When you're thinking about a presentation for the credit committee.
We can hear you. Go ahead, please.
You should be thinking about.
I'm Oluwashogo. Thank you very much, Mr. Winston. I really appreciate your presentation. I want to be clear about this issue. Of course, in a monopoly market.
Winston, just a second.
Yes?
Just a second, Oluwashogo. There's a conversation going on your side.
Okay, no, it should be gone now.
All right, thanks. Shogo, please go on.
Okay. And I want to be clear about this as a startup in terms of monopoly markets. Is it not? Are you advising the startup not to go to that kind of market? Because I'm kind of being. I don't understand. Is it that it is not rightful for a startup to go into a monopoly market? Because I discovered that in terms of the comparison of what you made in Pepsi and Coke, they have their own kind of area in which they are not perfect, in which a kind of startup can look at it and really work on it and make the market. Though I think the time space may be different to achieve final success, as you have said. But are you saying it is not advisable for a startup to go into a monopoly market? That's my first question.
Secondly, let me answer that one then.
Now.
Okay, go ahead.
Okay.
No, go ahead with the second question.
Secondly, in terms of you make a comparison of two concepts of this workman not trying to break through the market, and at the end of the day, we have the iPod in which it's break through the market. They break through the market. But I want to say that in terms of, is it that they started the business at the wrong time, or they don't get something right at that time when they started? What do you think makes them not to succeed in terms of that kind of niche they have taken? Thank you.
All right, let me start with the monopoly. I don't encourage startups to go after any monopoly market. You just get crushed. Basically, this is the best definition of going to a monopoly market. You create a startup to take on PHCN to deliver power across Nigeria. Regulation will kill you. There's just, between regulation and just getting everything, you will not get off the ground. It will take you.
Dangote is another excellent example.
Decade. So it's just, that one is just, it's not a business to go into. Now, in an oligopoly, you are right. Coke and Pepsi always leave gaps where people can come into. But if you look around globally, it's Coke and Pepsi. All the other brands are actually underneath. Now, yes, there's Biggie Cola who has a niche market here. Biggie Cola has a niche market, but let me ask you one question. When you walk into KFC, do you see Biggie Cola there? You don't. You know why? Because they have a deal where I don't know which one they have, whether it's Coke or I think one has with KFC has with Pepsi, I think. And they have a deal with Pepsi. Pepsi has put in the marketing dollars, and Biggie Cola is never going to get its product into any KFC. Same thing if you go to Mr. Biggs, or you go to what's the other people, or any of these other issues. They have the marketing power to keep you out of outlets. Now, it is not saying that it's impossible for you to go into that business and succeed. But if you're going to go into that business, you should be ready for a fight. You have to raise a lot of capital, and you have to find capital from true believers, from people that are just basically investing in a business because they want to invest in a business, and in 5-7 years they'll see their returns. They're not going to come into that fight with you. That's a fight of true believers.
Interesting. There are quite a few parts of the economy that is a monopoly, and really the question is, as a startup, do you have the muscle? Do you have the
No. The question is, you don't have the muscle.
Exactly.
There's almost no startup that has it, but you might have the technology. You might have the technology to change, to redefine that market. Now, if you have that, different story. If you have a technology that redefines the market, completely different story. That changes it completely. You can take that fight.
Can't you take that then to the monopoly, the one who runs the monopoly? Because, the most fundamental part of monopolistic markets is government policy.
The monopolies are usually broken in court. They are broken in court, and then technology splinters it. But the first thing you need court to break it.
Mohammed is asking a question. So imported local is always this question always comes up. How will a local producer compete with imported goods, especially where he is the only local producer?
If you're the only local producer and you can deliver value, and here's the thing, because you're a local person, if you can, what did a friend of mine called it? You have to be global and local at the same time. And this is basically what it is. If you are making ofada rice and you want to compete with, well, it used to be Uncle Ben's, they're about to change the name. If you're making ofada rice and you want to compete with Uncle Ben's, If you can give somebody a fried rice that has no stones in it, in packaging that is as good looking as Uncle Ben's, guess what? You can fight Uncle Ben's head to head, because whether we like it or not, if you don't want to accept it, you can leave. A fried rice is more nutritious than Uncle Ben's, because Uncle Ben's has the nutrients poured on top of it. The fried rice is unpolished with the natural brand still on it. So if you are the local producer, produce at the level of the imported. Don't just produce something and throw it into the market. That is usually, if you spend some time talking with the merchandisers and ShopRite, Spar, places like that, they tell you that's their number one, but produce it as if they have no respect for the market that they're producing it in. You should produce everything as if you're going to sell it in your competitor's front house. That is your goal. Your goal in any business is you want to sell it to your competitor's mother-in-law. So make it look that good.
One key thing that comes up, right, local versus international, is always the difference in costs, input costs that becomes price, right? Because the international guys expectedly have skill, and as such are able to run at much lower price, sell at lower prices. So now I'm manufacturing locally with all of the challenges that come along with that and the cost structure, and I have to sell at 10. But the rest of the market is importing from wherever, let's say China for the course of this conversation, and they are able to sell at 7. How do I compete?
I'm going to tell you a story. I'm going to tell you a story that's based on bad habits. So I used to work for a company, and we used to do business valuation. And one of our number one clients was a company called Glazers. And Glazers is the largest distributor of beer, wine, and spirits in the US. So we'll go down to see them in Florida, and we'll do our work, and then we hang out with all the people in the office. And when I would talk to them, here's the one thing they always told me. When they told me how they got away with some of the things they got away with, it's just unbelievable. The only reason I'm raising this is this. The difference in price sometimes has nothing to do with the value that's inside. It has nothing to do with what's inside. It's just the value that people have ascribed to it. I'm sure some people on this call know what Alizé is. For those who don't know, Google it. Alizé is this drink that is a mix of cognac and fruit juices in a bottle. Alizé sells for, if you go into most stores, Alizé sells for the same price as the mid-level cognac. But Alizé is made with cognac that is not fit to be drunk on its own. Now, if you're making a product in Nigeria and someone is importing it, and the import is more expensive than yours, that's your cost to bear. But what you have to do now is find a way to position your product in a manner that you can charge more, and people are willing to pay you more because they see more value in it. And that goes back to, how can I give more value to my customer?
Give more value to your customer, and your customer will be willing to pay more. Nuggets. Thank you, Winston.
Exactly.
There's something that you offered, and I haven't announced it yet. Maybe this is a great time to announce it. Winston is offering 1 hour each to 2 people, 1 hour of coaching to 2 people on this call. The idea is to provide support in your market segmentation, defining your market and make it attractive to investors. But I think most importantly is how you define your market that indeed concretizes your business plan in a way that helps your execution smoother and your chances of success a lot higher, right? So that's what Winston is often correct. Is that correct? 1 hour each to 2
That
people.
is correct.
Excellent, great. So somewhere, somehow, we're going to have to select who those 2 people are. And I'm going to be kind enough to let you make that selection. In the meantime, yes. So in the meantime, there's a hand raised. So I've just unmuted Ejiro Ogere. If you can ask your question, please.
Hello, ma'am.
Yes,
good evening.
we can hear you.
Can you hear me?
Yeah, go ahead.
Can you hear me, sir?
Yeah, go ahead. We can hear you.
Sir, I want to appreciate you for your presentation, sir. I just raised my hand to indicate my interest to be among the few persons you will select for mentorship, sir. Thank you very much.
Well, thank you. I don't think that is the most, while I do thank you, I don't think that is the most democratic way of doing this. So I guess I'm going to do this in a much, actually, I'll make this easy. So unfortunately, I have to run because I have another call that's actually about to start. But I do commit to doing this, and I think I can make this a little bit of fun. I can make this fun for people. But are most of the people on the call in Nigeria?
Yes, seemingly so from the names.
No, but there's someone in South Africa, so it won't be fair. If I ask a question about Nigeria, it won't be fair. So it has to be a question about, here's a question that everyone can get. So I would ask the first two people who can send a tweet back to our host Doja and tell us which is the largest country outside of Africa with the largest concentration of African people in it. First two people that get the answers, they win. Which country outside of Africa has the largest concentration of our brothers and sisters?
Okay, Tijani says USA. Halima says USA. Oof. Ejiro says UK. Gabriel, USA. UK. All right. So we have so many answers already. Canada, London.
They haven't gotten it yet.
Not yet. Okay, that's fine. USA,
Not yet.
Kenya is in Africa. The question is outside
Africa,
of Africa. Okay.
Who said?
All USA, UK, USA.
Okay, David and Samuel won. The answer is Brazil. Brazil has the largest concentration of Africans outside of Africa. So David and Samuel, congratulations.
Excellent. All right, so David Omonogun, please send your email address to me personally, private chat, and the same thing, Samuel Shitu, so that we can connect you directly with Winston. Winston, thank you so much. Thank you for this. This has been really in-depth, and the rest of the team also, everyone is saying thank you to you, and we appreciate the knowledge that you bring. Again, to everyone on the call, you consistently join us. Please remember to take action. Winston, one parting shot before we end.
Sure. Well, the one parting shot I'll say is everybody just, whatever it is that you're doing, just keep doing it. Don't stop. And always remember, the greatest products that you see today always started out as failures. We talked about the Sony Walkman earlier. Let me tell you another one that we all use today and nobody remembers it was a failure. Does everybody remember Slack? Slack was built by a company that went bankrupt. And after they went bankrupt, they were trying to figure out how do they sell off their assets and return money to investors. And they built Slack to work with themselves. And when they started showing it to other people, people wanted to use it. And today Slack is a multi-billion-dollar company. Slack came out from the ashes of a bankrupt company. It wasn't even what the company set out to do. So just remember, just keep going. You never know. No matter how many 100 times you fail, you never know. That next thing might just be it.
Excellent. Thank you. Never give up. That's the message, right? Never give up. Keep at it. If you believe in it, if you offer value, keep at it. Friends, thank you so much. Have a wonderful evening. Okay. Please keep safe. Keep safe, Winston. All the best with your next meeting, with your next call. Guys, if you're still on, anyone who's still on, please quickly take on our poll. We always like to hear from you. We would like to hear your assessment of this meeting. That's the first one. And then the second question is about the topic you would like to hear next. And normally what we do with the second one is use that to bring facilitators who are able to bring that knowledge to you. And then, of course, improve your business. So please vote. We have 39 people already voted. We're waiting for the remaining almost 30 people to vote, please. You know, it will be nice when, for those who are voting neutral, just, you can send me a private message. Feel free, please, if you have qualitative feedback. You want to express your feedback further, please do so in the chat box. Because it's very important to have feedback. In this case, you are the customer, right? And we want to know what works for you so that we tailor the message and tailor the content, tailor the speaker as well into what will make an impact in your life and in your business. Okay, 20 more people yet to vote. Guys, please, we want to hear from you. Please vote. Make your vote count. This is not APC PDP, but this one will impact you directly. Okay, we're going to wait. It's 1:53 on the dot of 2. We end the polling and we can wrap up. All right, that's it. I'm ending the polling. Thank you, everyone. Enjoy the evening. Keep safe. It looks like the next topic is going to be about networking, because that seems to be the one with the highest vote. Everyone wants to know how to network. What is the right approach in order to get the best out of your network. Thanks, guys. Thanks, ladies. Thanks, everyone. Enjoy the evening. God bless you. Bye.